Start broadcast.
The broadcast is now starting. All attendees are in listen-only mode.
Check. All right, everybody, welcome to the weekly webinar. This is Neil Green again with you, just like every Wednesday at the same hour, 3 p.m. GMT time. I would like to thank you very much for all the emails you sent me during the week, okay, for previous webinars. Last time we talked about the interest rate decision. Was very, very interesting, okay. We saw the interest rate went up from 1% to 125% in the United States. It was very clear and pretty easy to trade. And now we're going to talk about an event that takes place today. Okay, I just want to do a technical check. First of all, I would like to welcome all of you on GoToWebinar for joining us today, and you guys on Facebook Live joining us from the homepage of itrader.com. Welcome. This time we're going to talk about an event that is going to take place today. Okay. All right, just 1 second. Before we start, I just want to see that everybody can see the screen and hear my voice. Okay. Good. All right. Everybody can see the screen. Everybody can hear my voice. By the way, you guys from Facebook, if you have any questions during the webinar, more than welcome to write me a comment. Okay, I'll do my best to get all of you. And you guys from GoToWebinar, you have a chat window. So if you have any questions, of course, I'm going to leave some time for Q&A session. Questions and answers at the end of the webinar. You're more than welcome to write me down. Today we're going to talk about, as I said, it's going to be a webinar about the oil inventories. How do you trade on it? Okay, what's going on with oil right now, oil prices. It's a weekly event that takes place every Wednesday. Okay, so you can take most of the information that I'm going to provide you right now about oil inventories and use it on a weekly basis. Of course, we're going to talk about the environment and what's going on right now in the market. First of all, as you probably know, this is our homepage, itrader.com, all right, sponsors of Manchester City. And okay, guys, so let's start and scroll down a little bit. Okay, just for you to know for next webinars, if you want to register, all you have to do is just click on Save Me a Seat, put in your first name, last name, and your email address so we can contact you back in order for the account manager, your account managers, to call you back and give you further information after this webinar, okay? As I said, this is a weekly webinar, doing it every Wednesday to provide you the information so you can trade live on the capital market. This time talking about the oil inventories. These webinars are for free. This is a free service for you, okay? As our customers, you guys on Facebook, more than welcome to join us, all right? Opening an account, pretty easy, okay? You do it through the homepage right here. You can click on open an account and start. Okay, so let's start. Okay, oil inventories. Let's open the PowerPoint and talk market. Okay. Okay, so the subject today, trading oil inventories. And let's start. Now the weekly oil report will be published today at 2:30 GMT time. So just make sure that you know what is your local time. If it's GMT, GMT +1, GMT +2, wherever you're from. Okay, since we have different time frames in Europe, check where you're from. I'm talking with, I'm giving you the time by GMT time since we have customers from all over the world. So from all over Europe actually. So we're talking GMT, all right? So the weekly oil report will be published today at 2:30 GMT time. It's usually every Wednesday at 2:30 GMT time. If there's gonna be, where do you check it? You can check it on investing.com, or here I opened Forex Factory is a great website that gives you all the information. So you see 2:30, okay, this is set on GMT time. You see it takes place in the United States of America, as you probably know, the strongest economy in the world. Crude oil inventories, okay. You see it's marked in red, which means a very high volatility expected. This is a huge event. Okay, I want you to understand that this event on a weekly basis affects the market strongly. And for us as traders, strong effect at high volatility means great opportunities. If we know how to take advantage of these opportunities, okay, then you know where it's going from here, right? Okay, so So today at 2:30 GMT time, just set the clock and see that you got the right time on your country, wherever you're from. Good. Back to the PowerPoint. So the publication has been gaining strength in the past 2 years. Okay. The reason for that is probably, let me show you why. Okay, let's open the MetaTrader just to understand what's going on with oil prices in the world. Okay, this is the MetaTrader. Let's open crude oil. Take a look on our oil prices just to understand where we're heading, what happened in the past, and okay, CL stands for crude oil. Let me open a monthly chart, okay, of the crude oil. Okay, erase all these lines that I put here, and we're gonna put some new ones because good. Here's another one. And we're good. Okay, so as you probably know, right now it's traded at $43 and a half, 43.57 cents per barrel. Okay, this is the price per barrel of oil. This is a monthly chart of oil, which means each candle that you see here represent 1 month. This is the month from the beginning of June. As you can see, oil prices are dropping. We're going to talk about it. Okay, May, April, and so on. So back here in 2008, as you can see, oil prices were all the way up to 140. 2014, which is right here, on July 2014, okay, oil was priced at almost 100, 97 point something, almost $100 per barrel. Right now it's less than a half. We're talking about $43.5 per barrel. We have a lot of reasons for that. We're going to talk about some of them. We're going to talk about a few, the last few days. Okay, let's take a look on a daily chart. Okay, a red candle, of course, means that the price drops. A green candle means that we have that the price is rising up. So as you can see, yesterday and in the past, what is it, 2 weeks? Okay, price oil are dropping. Okay, let's talk about the reasons and let's try to understand the environment. I'm sorry, and try to understand what's going on in the world right now. So the expected number today is drop of 1.2 million barrels in US inventory. Less barrels in inventory could support the price and vice versa, which means, okay, if we have, this is a pretty easy thing to understand. We have supply and demand. If we have more than something, okay, what happens to the price? The price drops down if we have more supply. If we have less, okay, from a product, which means we have more demand, more buyers, and then the price goes up, right? Makes sense. Okay, so market participants are concerned that high inventory could keep oil prices low. Right now, the inventories, okay, if barrels in the United States are over 500 million barrels, which is a lot, okay? So we have a lot of supply right now in the United States in the firms, okay? As you know, they have their own technology. They don't buy oil, the Americans. And since they have such huge inventories, a lot of barrels, and then the prices, we have a lot of down pressure on prices, okay? A lot of supply, prices are going down. On Forex Factory, you can find the forecast for this event. As you can see, minus, as I wrote, minus 1.2 million, which means we expect from last week, from the event that took place last Wednesday till today, till this Wednesday, that this is the expected, you see the forecast, that we expect 1.2 million barrels less in the United States firms. Of course, any reading that is going to be higher than this number, okay, will supposed to push prices down, because if we have more barrels than expected, if the drop will be lower, or of course if it's going to be increasing in the number of barrels, we expect oil prices to go down, and the opposite. Okay, if we're going to see a bigger minus than 1.2 million here, which means much less barrels than expected, we expect for more demand and for oil prices to go up. Okay, we clear so far? Good. Okay, the previous number, by the way, was minus million point seven, and I'm going to show you exactly what happened last week, the effect on the market. Good. So oil is trading very low at around, as I showed you, $43 a barrel. Okay, three main reasons for the recent drop in the price. First is high inventory from the US. I told you we have which is at record high of above 500 million barrels. Okay, it's a record high. We never had so many barrels of oil in the United States. Of course, as I said, if we have more supply than from anything, price goes down. Companies right now are they product a lot of oil. Okay, the U.S. companies, oil companies, are producing a lot of oil, and this is the reason why we have such a drop in the prices. Okay, so this is the first reason. Second is the disappointing cut prediction from OPEC on May 25th. I don't know if you remember, we had a whole webinar talking about it. On May 25th, there was a meeting in Vienna, Austria, of all the 14 countries that are members of OPEC. OPEC is the organization of the oil countries, which includes 14 countries that they are predicting more than 30% of the oil in the world, okay, which is a lot. We're talking about countries like Saudi Arabia doing the most of it, but Qatar, Venezuela, Algeria, and so on and so on. You can go to the OPEC website and see all the 40 numbers. So they had a meeting on May 25th, and because of many reasons, they wanted to see if they can cut production and get an agreement. If they could do that and cut production, of course, if they cut production, we have less oil. We're talking about 14 countries that are responsible, folks, for over 30% of the oil in the world. Okay, if they cut production of oil, of course, oil prices would expect it to go high. Okay, to be higher, to increase, to go up. But we had a disappointing cut production, and oil prices kept coming down. So this is the second reason. First reason, record high in the United States. Just remember that this event takes place, measure the number of barrels, okay, the change in the number of barrels from last week in the United States. So if we have over 500 million, which is a record high, we're talking about a huge drop in oil prices. Second, we said disappointing cut production from OPEC on May 25th, the meeting that we just talked about. The third is the relationship between Qatar, Saudi Arabia, and Egypt. As you all probably heard on the news, everybody's boycotting Qatar right now, okay? Saudi Arabia started with it because of a lot of reasons. It's not only oil, there are some political reasons in that. And this is another, when we see the OPEC countries, okay, they fighting each other over many, many reasons. So oil prices are dropping. Now the second and third reasons, okay, are weakening OPEC, which means OPEC as an organization, because of the problems with Qatar right now, is getting weaker. Weak OPEC means weak oil. Of course, it's the oil organization. Weak OPEC means weak oil. OPEC controls, as I told you, 30% of global production in the world, which is a lot. Now, if Qatar pushes out of OPEC, then their organization could be weakened even more. So pay attention to this, okay? As traders, it's very important for you to get updated, educated, okay? Read the news, see what's going on with Qatar. Qatar is a rich country, okay? Maybe one of the richest in the world. They have a lot of gas, a lot of oil, okay? They do a lot of oil production. Now, if this political crisis that we're experiencing right now, what's going on right now in the market, if Qatar will leave OPEC, we expect, okay, OPEC to get weaker. Weak OPEC means weak oil, okay, and that's another thing you should consider. Now, traders should look for big movements after the publication today. Okay, since you have to understand in general, since oil prices are right now at around $43 a barrel, and we're talking about in July 2014, it was around 100,000. So we talk $100,000 a barrel. So we talk about more than 50% down, okay, 50% drop in oil prices. This is, it made the oil inventory event much more significant, I'm sorry. Affects the market much stronger than it used, than back in the day. So pay attention to this. The last two publications pushed the price of oil lower. Another reason, okay? Traders can diversify their trading today using correlated assets, which mean, in general, let me tell you something in general. Forget just a second about the oil inventory. In general, in order for you to lower the risk and to have more potential to make money in this market, you have to diversify your portfolio, which means split the risk. Don't put all the eggs in one basket. We don't want to trade only on one asset. We want to trade on a few assets. Now, if we know today on the oil inventories event which assets are correlated with which, okay, then we have actually what we need in order to take the right trades and diversify their portfolio. Now, following the big drop yesterday, oil currencies, and I'm going to show you which one are oil currencies, are reacting strongly. Okay, oil stocks are dropping as well. All right. For example, let's take pairs in currencies and understand what's going on in the market. The US dollar versus the Russian ruble gained almost 2% yesterday. I'm going to show you, and very close to the critical level of 60 rubles per dollar. Okay. When we say US dollar versus ruble went up, gained, it means that either the dollar got stronger or the ruble got weaker. Now Russia, okay, most of their income is from gas and oil. They send it to all over Europe, okay. Russia is a huge manufacturer of oil. Now think about it. If oil prices are dropping, okay, in July 2014 we said in 2014 it was $100 per barrel. Right now it's less than half, which means almost a third, which means Russia, okay, most of their income, okay, was cut by around 2/3, which is a lot, okay. So oil drops made a 2% gain, which means the ruble got weaker. This is why the USD versus the ruble goes up, because the secondary currency here, the ruble, is weaker at the moment. And going to the MetaTrader, let me just show you on the chart. It's much easier when we see it in front of our eyes. All right, let's take a look on USD versus the ruble. USD ruble, you see, and daily. So as you can see right now, look at what happens since the drop in oil prices, okay? Last inventory took place, this is the interest rate decision, last inventory. You see the dollar got stronger because the ruble is getting weaker. Now, as you can see, we have a strong resistance line, okay? Here, if you know some technical analysis, on 60, okay? Even a bit higher than that, I would put it here, okay? On $60 per 60 rubles per $1. You see, the price today went all the way up, touched the resistance and goes down. Now, this is a crucial, okay, thing. The whole world is looking at this, okay? The USD versus the ruble. This is when I say that you can diversify your portfolio, because of course you can trade on oil on the event, but you can trade on currencies as well that are related. Countries that has a strong correlation with oil. Countries that are huge exports of oil, okay? And the oil inventory in the United States will affect them strongly because it affects the oil prices, and according to that, affects the currencies. Now you see this resistance line on 60, okay? If we're gonna have a huge drop, okay, in oil inventories, or I wouldn't say a huge drop, yeah, a huge drop, we're gonna see prices going up, okay, which means it's good for the ruble. But on the other side, if we're gonna have another disappointment, okay, which means a lot of inventories, we expect oil prices to drop even more. If they're gonna drop even more, we expect the ruble to get weaker, and 60, you see USD versus the ruble, 60 is a crucial point. So see if it breaks this resistance. Usually on technical analysis, if we have a breakthrough of the resistance, the price can go up, I don't know how much, and this is one thing you can trade on if you like. Now the other thing, okay, okay, Norway export a lot of oil as well. So the USD versus the Norwegian krone, okay, NOK, gained around 0.6% yesterday. The USD CAD gained more than 0.5%, okay? Let me show you both if you want to trade currencies. USD NOK, you see, gain goes up because of oil prices are dropping. The NOK is getting weaker. USD is getting stronger versus the NOK. Same thing, if you want to look at the USD versus the Canadian dollar. Canada exports a lot of oil. You see in the past 2 days, 0.5% up. You see, because of the oil drop, okay? Going back to the oil prices, you can see CL, there you go. You can see what happens in the past few days. Okay, all the way down to 43, for right now it's 43.7. Okay, oil drops in like 2 weeks because of the 3 reasons that we talked about. Another thing is Exxon and Chevron, okay? These are the American oil companies, okay? They're dropping around 1%. They dropped around 1% yesterday. So if you want to trade stocks, there you go. You have Chevron here. let me just show you the reaction. When oil drops, oil prices drops, which means oil companies that are producing oil, they make less money, okay? It affects their income. Look at Chevron, okay, went down. You see the gap down here. And look at Exxon, you will probably see the same thing, okay? We have a gap down, 1%. Good. So you can trade, if you would like, stocks, the oil stocks, okay? You can trade the currencies that are correlated with oil, and of course you can trade oil as well. Traders can trade oil inventories using all those assets. The assets include, you can write it down, oil, Brent oil, crude oil, okay? Ruble, the Canadian dollar, the NOK, and the stocks such as oil stocks, American oil stocks, such as Exxon, Chevron, and more. Now, trading setup should be prepared to all major assets. Of course, I'm saying it every webinar. I'm going to repeat it again. In order for you to be an independent professional trader, you need to know how to combine the fundamental analysis that I'm showing you right here with the technical analysis, which means before you take any trade, I want you to put some key levels, some support and resistance lines, okay, some key lines to understand how high or how low the price of the asset might get. Okay, support and resistance levels should determine entry points after publication. So do a setup of the assets you would like to trade on, put the lines and understand where are the resistance and support lines. High volatility expected, of course, after inventory publication. And of course, good luck. So if you want to trade, okay, on just for example, Exxon, okay, if oil drops, we have a strong support line here at 80 and a resistance line you see on the daily chart at around 83. Right now it's 82. Okay, so you got a resistance and a support line. All right. On the other hand, if you like to trade Chevron, you can put a resistance line here at around 108, $109 per stock, and a support line down here at around 104, $104.5 per stock. Okay. You want to trade on one of the currencies? Let's just check. You see how you do it? You go to the USD versus the ruble. So we talked about the resistance line on 60 up here. Okay, and the resistance, I'm sorry, and the support should be somewhere around here at around 56, 55 rubles per dollar. So set up your assets, diversify the portfolio, don't put all the eggs in one basket. And of course, if you have any more questions, more than welcome to email me. Guys, if you want to join our next webinars, okay, pretty easy. Go to the homepage. Make sure today it's 2:30. Okay, so make sure you pay attention to this. Just go here and join. Click on Save Me a Seat and join our next webinars. I would like to thank you very much for participating today. Hopefully, I'll see you here next Wednesday and every Wednesday. Okay. Okay, these webinars are for free and it's a free service for you. You guys, if you need more information, you're more than welcome to contact your account managers right now before the event takes place. Okay, and of course, good luck and trade. All right, this is the time to make money here. So thank you very much for participating and trade smart, guys. Trade smart because trading in the capital market involves a lot of risk, but on the other side, if you know how to do it correctly, you can make potential profits as well. All right. Thank you for participating and have a great one. Thank you. Bye-bye.